So now we will start discussing questions from the 700 series, starting with essay 700, forming an opinion and reporting on the financial statement. So the first question is that as an expert, so the auditor is required to advise regarding the audit which is conducted in accordance with both the Indian and the international standards. So what should the auditor do in this regard? So let us read and understand the question. As per SA 700, forming an opinion and reporting on the financial statement, the auditor may be required to conduct an audit in accordance with the standards on auditing issued by ICAA and sometimes also along with the international standards or the auditing standards of other jurisdictions. So in this case, the auditor's report may refer to both the standards on auditing in addition to the international standards also, when there is no conflict between both. When there is no conflict between the requirements of the international standards and the auditing standards, then and those standards that would lead the auditor to form a different opinion. So when there is no conflict and when both are not leading to different opinion, or when there is no need to include an emphasis of matter para or other matter para, and the auditor report includes at minimum each of the elements set out in the audit report. So basic elements should be there in both the report. So there is no conflict between both the standards, and there is also no need to give the situations that there is no need to give different opinion. There is no conflict, no different opinion, there is no need to include emphasis of matter and other matter para, and at least minimum of each set of elements are included in the audit report. Then the auditor can refer to both the standards in that report. Also he should mention the name of the jurisdiction and the origin of the other accounting standards. So the name clearly identify, so he should tell from which country it is there. Specify the jurisdiction, and he should also mention that this particular report is governed by both the standards. So this has to be mentioned when it is covered by both the standards. Now moving on to the next question. Supplementary information and when it is not required to be presented. So what is the role of the auditor in that scenario? If supplementary information is not required by the applicable financial reporting framework, but that is being presented along with the auditor financial statement, the auditor should check if in the auditor's professional judgment is it an integral part due to its nature or how it's presented. So the financial reporting framework is not asking for the supplementary financial information, but the auditor is presenting them, and it is looking like we should check if due to the nature of how it is presented, it is looking as if it is an integral part. Now if at all really it is an integral part of the financial statement, then it should be covered by the auditor's opinion. So they have presented in such a way that it is looking like an integral part of the financial statement. Then really when it is an integral part of the financial statement, it should be covered by the auditor's opinion. When it is not required and not considered as an integral part, then we should clearly tell that no, it is not required, and we should differentiate and present it. So when it is an integral part, it should be presented like that. When it is not required and it is not an integral part, it should be distinguished and presented. Then if they have not sufficiently clearly differentiated and presented it, we should ask the management to change how they are presenting it. So if it is not distinguished and presented in the same manner, we should ask the management to change the method as to how they have presented it. And if the management is refusing to do so, then we should identify those unaudited supplementary information and explain that this is not audited. Like this we should mention. Okay, so in this case there is an additional profit and loss account that is presented in here, and it includes specific items of expenditure, and it is disclosed as a separate schedule. So this is not something integral, means it should be clearly differentiated from the financial statement and presented in some way. Clear? And if it is not presented in some way, then we should request the management to present it so. And if they are not presenting it so, then we should clearly include a para that explaining that this has not been covered by audit. Like that we should mention. And one more question is also the same thing. Okay. Now, with regard to auditor's responsibility, that is as stated in the auditor's responsibility for audit of financial statement, there is one thing that has to be communicated, which we will also see in those communication standard. The thing is that significant audit findings and deficiencies identified in the internal control is also be communicated to those charged with governance. So, significant audit findings and deficiencies, okay, both these things should also be communicated. Okay, so this is one of the important crux which is to be dealt in SA 700. Moving on to SA 701, which is communicating key audit matters in the independent auditor's report. So CAM, communicating key audit matters in the independent auditor's report. Now here what happens is that so he has found certain things, and the audit partner is discussing this with the management, and they have also communicated it to the management. And the point is, the management did not agree whatever the auditor has said with the reference to the revenue recognition. He has given some pointers, but the management has not considered that. Now, with regard to this audit report, what is our stand? Clear? So SA 701, communicating key audit matters in the independent auditor's report, deals with the auditor's responsibility to communicate key audit matters in the audit report. It is intended to address both the auditor's judgment as to what to communicate and form and content of the communication. So what to communicate, how to communicate, content of such communication, how they will communicate, form and content, which form it should be there and what should be included in that, and what should to be communicated in the audit report. Now, the auditor shall determine from the matters communicated to those charged with governance that requires significant audit attention. So whatever we are communicated to the management, from that we will select the significant thing and we will present as the key audit matters. Okay, so when we talk about key audit matters, we have a mnemonic which is called as a JRT. So judgment, risk, transaction. So significant judgment, significant risk, that is what we called as a higher assessed risk of material misstatement or the significant risk, JRT, and significant transaction. So all these things should be communicated. Okay, so areas of higher assessed risk of material misstatement or significant risk identified in accordance with SA 315, and that is identifying and assessing the risk of material misstatement through understanding the entity and its environment. Significant audit judgment relating to areas in the financial statement that involve significant management judgment, including accounting estimate. Then the effect on the audit of significant event and transaction. So significant event and transaction. So all these things, they are key elements which could be included. Clear? Now when we talk about this, they are talking about something with regard to the revenue, and this is also a significant matter, and it can it qualifies to be a key audit matter, and it could be included in the CAM paragraph. So this is a point with regard to that. And so we have seen that there are specifically three matters which we told we will include. So first, the areas of higher assessed risk of material misstatement or the significant risk, significant judgment relating to areas of financial statement that involve significant management judgment, including accounting estimates, and significant events or transaction. Okay, so these are the most significant. But sometimes there are some matters which are also to be included even though they are not a financial matters. For example, implementation of new IT systems. So this is one example of what could be a key audit matter even though it is not a financial item. And there are also few more examples. Let us read it from the book before we move on to the next one. And so we have it in here. Okay, so implementation of new IT system, so or significant changes to the existing IT system during the period. So this is something which is an important area which warrants the significant auditor's attention. And if such change had significant effect or an overall audit strategy or related to significant risk, then it is necessary that we can also include in the key audit matter para. So this is some more detailed with regard to that point. Moving on to the next one. So a past MTP question. So let us do an in-depth coverage with regard to that. Alright. So now when conducting an audit of CGX Limited, a listed company for the year 24-25, the CA notices that the company has extinguished the following material liability unilaterally without entering into settlement with the creditors and reported these amounts as gain under other income. So they are having two liabilities: liability for purchase of raw material and liability for capital good they are having. So that is 3.5 crore and 2 crore. The management of the opinion that these dues are no longer payable. They are having a liability, simply they are writing it off. Therefore, retaining these liabilities in the financial statement would lead to overstatement of the liability. Extinguishment of the liability is like a normal trade practice they are telling. And outstandings are written back after stopping dealing with the creditors. Okay, now the auditor wanted to send external confirmation to the creditors, but the management told that then these could be used by the creditors as proof of liability. So they are telling you should not talk with the external person. So what is to be done with regard to this? So slightly update, we have moved on to the next. This is also covering SA 705 in addition to what we are going to see. So we are seeing SA 701, but this is covering both 705 and 701. Alright, now how are we going to deal with this regard? Firstly, so it seems that this is something they are not allowing us to communicate with the other people. So what we should do? Professional skepticism we'll have to maintain, and we should be alert to the possibility of misstatement in the financial statement. Alright, now what SA 505 tells us that is that whenever such a scenario is happening, we should check if the reason that is told by the management, that is do not communicate with the external party, they should see if it is valid and reasonable. Okay, they should check if it is valid and reasonable. If at all it seems not so valid, we should assess the risk and perform alternate audit procedures, not additional procedures. Alternative audit procedures should be performed. Further, if at all it goes like this, we should also modify our opinion. Okay, as per SA 705. The auditor concludes that based on the audit evidence obtained, the financial statement as a whole are not free from material misstatement, and the auditor is unable to obtain sufficient appropriate audit evidence to conclude that the financial statements are as a whole are free. So financial statements are not free from material misstatement, and if the auditor is unable to obtain sufficient appropriate evidence, then what the auditor should do? The auditor should modify the opinion. All right. And so in this case, if she is not able to get and furthermore evidence even after performing the additional sorry, not additional, alternative audit procedure, then she should modify. Okay, fine. And also she wants to include it the key audit matter. So is that proper? Key audit matter is not proper, because in key audit matter we will communicate, it is about communicating key audit matters in the in the independent audit report, which means whatever we have communicated to the TCWG, whichever we want more emphasis, we will include in that. But just by including in the key audit matter, it is not a substitute for expressing a modified opinion. So whenever there is a need to include a modified opinion, you should modify the opinion. Okay, key audit matter alone, if you put, it is not sufficing it, because we have not been able to obtain the evidence at all, and the opinion itself is not you are not in a position where you can give the opinion. So for the same purpose, you should not include the key audit matter, you should only modify the opinion for this purpose. Fine. Okay, and one more item which qualifies to be called as a key audit matter is that whenever we need a significant audit judgment relating to areas in the financial statement that involve significant management judgment. Okay, so this area had significant management judgment. Okay, and significant auditor's judgment is also involved, because this relates to something called as a accounting estimate, and there is high estimation uncertainty. So basis level, we are going to give an audit judgment which is significant. Okay, and the management judgment in that matter also has been significant. If we delve deeper, then we get to know that it is about an accounting estimate, and there is high estimation uncertainty for the same. Alright, so maybe with regard to recognition of revenues or creation of some provision with regard to that, in that cases all these matters could be addressed in a key audit matter para SA 701. Alright. Okay. Now one more question which has been a part of audit pronouncement. While auditing the complete set of when auditing the consolidated set of financial statement, a listed company using a fair presentation framework discovered that the consolidated financial statements are materially misstated due to non-consolidation of one of the subsidiaries. So clearly we can tell, so there is something wrong. We have not included one subsidiary. So it could be material. Okay, it could be a material error. Alright, material misstatement. They wanted to provide an adverse opinion and further determine that there are no key audit matters other than the matter described in the base of adverse opinion section. So they're telling there is nothing called as a key audit matter. Alright, fine. So the point is so whenever there is an adverse opinion that is to be given, okay, we'll have to give only that adverse opinion. So just by putting in the key audit matter para is not sufficing the whole regard. Okay, so key audit matter is not a substitute for disclosure in the financial statement. Alright, and SA 705 is also telling that when an auditor expresses a qualified or adverse opinion in accordance with SA 705, presenting the description of the matter giving rise to modification the basis of qualified or adverse opinion helps to promote the intended user's understanding and to identify such circumstances when they occur. And separating the communication of this matter from other key audit matter described in the key audit matter section, therefore gives it to the appropriate prominence in the audit report. So putting that adverse thing in the adverse section and not clubbing it in the key audit matter para. When the auditor expresses a qualified or adverse opinion, communicating other key audit matters could be relevant to enhancing the intended user's understanding of the audit, and therefore the requirement to determine key audit matters apply. Okay, hence when there is an adverse opinion, which is when it's both material and pervasive, so he will give an adverse opinion. The auditor may determine that no other matters are key audit matters. So this also, like this also he can give. Fine. So he will tell that except of the matter which is given in the base of opinion section, there are no other key audit matters which is to be communicated in the audit report. Like that he will mention, and he will close up the key audit para. So this is about essay 701.